Ooh, that looks messy. What's going on YouTube, TikTok? Not too sure where I'm gonna post this first. Whatever that happens, make sure you check it out. Look, been trading this kind of trade. It looks familiar. I thought I should just share it with you guys. So then this particular trade looks familiar because I've taken it a couple of times. Look, we have an impulsive move to the downside on a higher time frame. Okay, a bit of consolidation. In this case, it's about for 12 hours. We see that move continuing down, breaking the previous low with a strong bearish sort of candle. Not as strong as the initial impulsive one, but strong enough to convince me at the very least that we might be looking at a possible downtrend. Okay, so we're gonna try to find our way into this trade. One way to do that is go to a smaller time frame. In this case, we're gonna try to find our way into the 15 minutes chart. Hey, I think I might be late, or I should be entering this trade immediately, because what I usually do is I would have my stop loss right above here. This is called an FTR. An FTR stands for first time return to the initial liquid place, where they left us a clue at the very least that we might come back to this area, and when we do, we're gonna make some big moves. Okay, how do we identify it? Again, with the consolidation. After a consolidation, an impulsive move to break that consolidation. Why do they break that consolidation? They gave you this initial move to the downward. That consolidation tells you that you might want to go in somewhere around here. Put your stop loss over here above this candle. And what do? Convince you that they are going to the downside. Maybe sometimes they even break this low. But then what do? They go up, break your stop loss. Right after they do that, go back to the downside. Okay, so what I like to do is just have my stop loss, if I'm gonna have it tight, just a few pips above this area right here. If you want to see it clearly, maybe you might want to move to a 5-minute chart. Some people might say it's a big leap. I don't think so. If that does not work, so this is what might happen. Okay, so it might not have enough. Why did I do that? It might not have enough momentum to push all the way to the downside, or at least print this the length of this initial downtrend down again, right? It might not have enough momentum to do that. So what they like to do is at least come back to this area. Okay, it's not a bad trade. You might eat a few pips, but if you're patient enough, you might let them reconsolidate again, okay, in and around this area, and then go into what, like I said, I'm not too good with these names, but I think it's called a Quasimodo. I just know the technicals, like I can break it down to you as to why they move a certain way. Again, they look for an area of interest, a lot of liquidity. This looks like that kind of area. Excuse me. Print out the consolidation in and around this area. Okay, why do they print out their consolidation? To convince you that they're going up, or maybe they're going down. So they play these mind games with this consolidation, which is what they were doing here. Explained that earlier. Didn't want this video to be too long, so I'm just gonna wrap it up. Okay, they're gonna come to this area. How do you find this easily find this area? You just look for what looks like a shoulder on this. You guys see that? And once you see this shoulder, you just put your entry point here, your sell entry. I want to turn this into green to represent our entry point, and I'll put this bad boy right here, few pips above this head, you know, and our risk reward will be somewhere here. I think it's the same length as this. Oops. Let's go. Let's make that nice and tight. Like I said, I'm a bit conservative, you know. I don't like, a lot of people like to place it right at the tip, right at the top, and towards the lower low. But like I said, I'm a bit conservative. So that's our risk reward. If you want to check it out, it's a short position. So that's a good risk reward, I would say. You want to drain every single one of those pips out of this trade. Okay, that's what it looks like. Maybe my 2 cents can make you a couple of dollars. Like I said, I've been trading for the past 2 years, been profitable consistently for the past 7-8 months. Let me know if you want me to go deeper into how I made the kind of choices I made into this trade. What's the psychology behind it? It's a very straightforward trade. You know where to get in, you know when to get out, you know when you've lost the trade. It's very straightforward. The risk reward is usually very high, and it's printed all over the chart. This is printed all over. Even if you look at this part right here, it looks exactly like what's going on over here, right? So this would be the shoulder where these guys are. This would be the head where this guy is, right? This area, right? And that impulsive move to the downside. It's constantly being printed up. You know, we can go further back if you guys want to look for even more Quasimodos. Seems like we can't find any, but you know, I can break it down to you as to how to find it, how the psychology of it all works. If you're interested in that, if that's something you would like to know, just make sure you leave a comment down below. You like this video, and I'll make sure I hit you guys back up. Alright, I'm out. Oh, before I leave, I'll obviously be trading this, and I'll show you guys the results. I hope you stuck to the rest of the video, because here are the results. Okay, so it looks like our trade for the FTR was respected, the initial one. Remember, I had 2 possible entries, the FTR or the Quasimodo. It looks like the FTR, which is this area right here. Okay, this area is called the FTR. Why is it called the FTR? Price broke this area, made some liquidation here. It broke, and then it returned to that liquid area again. Okay, once it returns, it comes to collect whatever orders and then breaks to the downside, which is what I was trying to explain in the first. The Quasimodo, which was the second possible entry, looked something like, how do I move this? Okay, this would have been our Quasimodo, and I'll come back to the perimeters in just a bit, but this would have been our Quasimodo area, meaning if price was unable to break this area, let me just try to, if price came back to the FTR, came back down, but was unable, like it was on here, it was unable to break this resistance, this support, it would have came to the Quasimodo area and then made that downward trend. But it seems like it did respect our FTR right here. So I think I entered the trade on the the second bearish candle. So when it started putting out that second bearish candle, that's when I came in and I had my stop loss just above here, like I explained there in the first bit of this video. That's where I had my stop loss. I had my take profit. This is how I measured my take profit. And I was actually taken out. I didn't get to see any of these movements. I just set my parameters, executed, set my parameters, my stop loss, my take profit, and by the time I came back to check on it, it was done paying me. So this candle was my entry level. So this would have been my PC is a bit slow these days. I don't know what's going on. Probably need to get some memory. But that's on this candle right here. This is where I was taken out. If I saw the trade, I would have been a bit more skeptical when I started seeing this upward trend. But like I said, they're trying to play mind games with this up and down, resistance, support, resistance, support. Initially, they are going to, eventually, I mean to say, they are going to go towards your direction. And like I said in the first bit of the video, Quasimodo constantly prints itself on the market. If you don't believe that, remember how I said this area was our original Quasimodo. So that point, and I know I'm explaining quite a bit now, but I'm almost done. This would have been our shoulder, which would have been our entry point, and right above the head, which is this point here, would have been our stop loss, and we would have expected the market to move down. So this is what a Quasimodo looks like. You have this shoulder, you have a head, and you have a break of this two bad boys right here. You have a break, and then once it returns back to the Quasimodo, you know you can execute your sells. Okay, now if you take a look at this area, this new area right here, right, it's exactly what I've been explaining. You have your shoulder right here, either one of these two you can, but I would probably take this one, the latest one. So this is a shoulder, right? The head, the break, this is where it breaks this resistance like it did on here, this point. It broke on here, so all we need to do is just wait for the market to get back to this area, which will be our new Quasimodo. I'm sorry. This area will be, it's almost the same size actually. This would be our new Quasimodo, and once price comes back into it, we expect a sell. That's how Quasimodo works. It's all over the chart. It's literally everywhere. You want more information, make sure you hit me up, either in the comment section, or you can just DM me if you see this on TikTok. I'm out.